Hi, welcome to Investing in the Real World. My name's Anthony. In today's episode, we're going to be talking about how you can invest in essential real estate. Specifically, I'm going to be talking about drugstores. Yes, you can actually own a CVS or Walgreens, get paid every single month without any employees, no management responsibilities, and just mailbox money. Be sure to subscribe to get more information on investing in the real world from actual case studies and investors like myself and clients that I've helped. So I know it sounds funny, right? You're driving and you see a CVS, you see a Walgreens, you see a Thrifty. I didn't know until I got into commercial real estate that you can actually own that building. In fact, there's a lot of insurance companies, a lot of retirement firms and investment companies that own drugstores all across the country, publicly traded companies as well. But you as a private investor can own it. So how does it actually work? Well, when you buy an apartment building, you actually inherit all the tenants, right? So the tenants go with the building, and then you have the leases in place, then you take over the management. In this type of product, this type of property, which is actually called a net lease property, also known as a triple net, it's the same. You own the box, you own the building, but you don't own the business. And the tenant could be Walgreens, could be CVS, or like I said, could be Thrifty. Now, why would they do that? So they can't trust that you're a good manager of the property. They can't trust that you're going to pay your taxes or you're going to pay your insurance because their business is dependent on you as a landlord. So what they do, and this is the best part, they actually cover all the maintenance, all the expenses, even your insurance, and even pay your property taxes. That's right, they actually pay your property taxes, and then you just get a check or a deposit every single month for the term of the lease. How does it work? So when you buy a property like that, the lease is already in place and it may have 10 years, 12 years. Most of these leases are very long. You see, Walgreens doesn't want to be moving every few years, so they have long-term leases. It could be 20 years. I've seen 60-year leases. And when you buy the property, you just take over the property and receive the payments. It's mailbox money. What kind of returns could you expect? Well, if you're familiar with cap rates, maybe you saw my other video when I went over cap rates. Check this out. A cap rate is typically on a drugstore might be somewhere between a 5 to like a 7.5 or 8. What does that mean? $4 million property, you'll receive at a 5 cap, you'll get $200,000 a year, straight cash flow. All right, so it's a 5 cap on $4 million. How does that work? You take $4 million times 0.05. That is your net income, and that's the amount of money you're going to be receiving. So there are new construction drugstores that you can buy. So, there's a brand new lease, but typically it already has some years that I've already spent on the lease, and you're just going to take over for the ownership. The two most common questions that get asked. Well, what happens when the lease runs out? And this sounds too good to be true. What are the risks? Very good questions. So what happens when the lease runs out? Most of these leases have options. So the term, there's the base term, and then they have options in the back end. So any of these corporate guarantees could continue and still have the leases and exercise their option. But I don't suggest you wait to the very end to see if you could extend that lease. What you want to do, the ideal thing, is to try to negotiate before the lease runs out, let a few years left on the lease, try to negotiate. If it's not able to come to terms, then you could add more years to a lease by exchanging. What does that mean? You sell this property to buy another one that has a longer term lease, and you kind of just keep doing that, which is pretty common for investors. Some investors don't mind if the lease runs out because then maybe they can actually get higher rents. So that's one of the things you have to weigh. What is the rent per foot now and what could it be? And maybe you're going to be actually making more money and it'll be a positive outlook for you when the lease runs out. Okay? The other question, what are the risks? Well, like any kind of real estate, you're going to have to understand what's the demographic? What are the store sales? Not all the store sales are reported, but Walgreens and Rite Aid, from their perspective, they actually want to stay in town and they want to be in business, but they want to make money. So if they have decent store sales in the area, they're going to stay and they're not going to go anywhere. But if the store sales are really bad or there's no population or people kind of moved on, then they might not extend their lease. The good thing is that you're actually going to get a corporate guarantee. So regardless of how the store sales are doing, you're still going to get your payment. You're still going to get your mailbox money every single month for the terms of the lease. But risks, like any risk of real estate, you have to look at that. What is the piece of real estate? What is the income and the general population in the area? And are there other options with this real estate down the road? So those are just some of the things that you can do to kind of hedge any of the risk you may have. Other than that, it's pretty clear cut. You buy a property, there's a lease in place, and you get paid. Obviously, you're going to have an attorney look over the lease for you, but that's essentially how they work. Now, where are these properties? They're all over the United States. So they're across the country and in major cities and small cities alike. One thing to note is that most investors that own those don't actually own them in the same state or even in the same city that they're in. They own, and honestly, because like I said, there is zero management responsibility. You don't have to go and open the doors. You don't have to clean up anything. No professional property management you have to hire. So it really doesn't matter. You know, you may be in California and own in Texas. You may be in Iowa and own in Arizona. Happens all the time. All right, so that's where they are. Now, why would somebody buy a property like this? Well, obviously, the property like this is for an investor who either got out of a higher management responsibility property like apartments. Maybe they had a few apartment buildings and they said, you know what, I'm going to retire now, so I'm going to cash out these and buy this net lease deal where I could just have stable cash flow and zero management responsibilities. That's a typical investor, somebody who exchanges out of apartments. Another one, investor, would be somebody that said, you know what, I'm just going to add it to my portfolio for cash flow, and that's their plan. So they invest in these across the country. There's different groups that do that. On the smaller side, there's smaller net lease deals like dollar stores or fast food restaurants. You could always buy those. And those might be in the price range between like $1 million to $2 million. What determines the price of a drugstore? The guarantor. So who is backing the lease? Is it a corporate guarantee like a Walgreens? And then what are the terms left on the lease? So how long is the term left on the lease? Is there only 2 years left? Is there 3 years left? Is there 15 years left with some options? What is the length of term? And of course, what is the cash flow? Those are all the major factors that play into the price of your property and the cap rate that you're going to be getting. So how do I invest in a drugstore? It sounds great, Anthony. I want to own a drugstore. And no, you do not need a pharmaceutical license. You're just going to own the building, not the business. How do I get started? Well, first you kind of have to figure out how much you have to invest and then decide if that's in the price range for you. There's obviously financing for these types of properties. Typically about 40% down. So a $4 million property, 40% down will be about 1.6. But, you know, there's several commercial banks that provide that loan, and you'd find a commercial agent like myself or my team that'd be able to help you. It's a specific product type. Just like if you're going to be buying a house in the neighborhood where you live, you probably want to use an agent that is familiar with that area. With net lease deals, with commercial real estate, you want a specialist on your team to be able to help you navigate it and help you find the best deal out there. So let's sum it up. You can buy a drugstore. Yes, you can. It's all legal. And it happens more than you know. You're not going to find a for sale sign in front of the Walgreens or the CVS. That's one of the things. They're a little bit harder to find because they don't have for sale signs, obviously because they don't want customers to know that the building's for sale. But it's they're for sale. And the way to find them is to have relationships with commercial real estate agents or firms that specialize in that product type. I looked a little bit earlier today on the market. I found a little over 300 available across the country. One in particular, listed by an associate of mine, is this one. You can see this one over my shoulder. This one's actually in Connecticut for about 7.8. And here's how the cash flow works. So it's listed for 7.8. It's actually 7865. So 7865. And the cash flow that is on the lease is $491,000. So $491,000, got my calculator here, divided by purchase price, 7865. This one is actually a 6.2 cap. So if you buy this property at the list price in Connecticut, this Walgreens here, for 7.865, net cash flow, $491,000 every single year, your cap rate is 6.2%, right? So how do you think about this? If you did zero financing, no loan, and you had 7.8 in the bank and you purchased it cash, your rate of return, the money that you're going to be getting every single year, is $491,000. Comes out to about 6.2% return on your money that you put down. Of course, the numbers change if you go financing and put a down payment, but that's how they work. The cap rate is the net operating income over the price. And because a net lease deal has zero expenses, remember, no property taxes, no insurance, no maintenance, pure cash on a triple net lease, that's just cash flow for you. It's mailbox money. And this is priced at 7.8. I've seen others priced in the 2.5 million range. I've seen in the 4.5. Again, it's all based upon the income, where it's located, the years left on the lease, and who is the guarantor. Thanks for watching. I hope that was helpful. And maybe you get inspired next time you're driving and you see a drugstore that could be in your portfolio someday. Be sure to subscribe, share with a friend. My contact information is below. Feel free to reach out to my team and I. Take care and stay safe.